How to invest in real estate. Investing in real estate can be both lucrative and satisfying, and it is among the greatest investment strategies. Investing in real estate or purchasing a property is one of the oldest but still effective ways to make money. Well, the approach in real estate investing differs from investing in bonds and stocks, because in this investing, owners can utilize the leverage to purchase a property by paying a part of the total amount up front and then paying the remaining amount plus interest with time. Generally, a 20 to 25% down payment is required for a traditional mortgage. However, in some scenarios, you can buy a complete property with just a 5% down payment. That's the power of controlling the asset at the time when the papers are signed, and it encourages both landlords and the real estate flippers. And with that, they can get second mortgages on their houses to make the down payments for the new properties. In addition, this investment can offer both money in the form of rent and also appreciation. After selling a property whose value is appreciated, you can make a decent amount of profit from it. Not only that, it is a brilliant strategy for diversifying your portfolio, and you can make it as an additional income stream. Well, there are many ways to invest in real estate, from purchasing and renting properties to flipping properties. In this video, we will be talking about investing in this sector in detail. We will discuss some of the most effective ways that investors are following to make money on real estate. So, stick with us until the end so you can understand things easily. Number 5 is crowdfunding real estate platforms. Crowdfunding in real estate is a strategy that lets companies raise capital from a large group of individuals. It is good for individuals who like to have hands-on experience should try out real estate crowdfunding. The process is done through online platforms that are a marketplace in which the developers of the real estate and potential investors conduct a meeting. These platforms also allow people to invest in certain real estate development projects. The crowdfunding platforms pool money from a group of investors to fund these projects. Generally, the investments are for longer periods as they require investors to commit for 5 years or more than that. These platforms charge a fee, so it is important to look out for any extra fee or cost that can disrupt your overall returns. Remember that these real estate crowdfunding platforms are not available for every investor, because most of them are reserve-accredited investors. These are the investors who are experienced and have a high net worth. However, there are multiple platforms, such as Realty Mogul and Fundraise, that are less exclusive and allow new investors to start investing for as low as $500. With these websites, you can either create an account or choose a portfolio strategy according to your goals. Well, you can get geographic diversification with crowdfunding platforms, and you can choose between a single project or a portfolio of projects. Despite these advantages, this investment can be risky because this is not as liquid as the other publicly traded securities like stocks. So, it is highly recommended to conduct thorough research because, in this real estate investment, your funds can be tied up over the long run. Number 4 is real estate investment trusts, or REITs. This type of investment is suitable for investors who are looking to experience this sector without having a traditional real estate transaction. In short, it allows you to invest in real estate without physical real estate. REITs, the real estate investment trusts, work in a manner in which a corporation or a trust utilizes the investor's money to buy and operate income properties. Just like other stocks, REITs are traded on the big exchanges. The companies or firms raise funds by issuing bonds and selling shares of stock, and they utilize the proceeds to buy and lease out real estate, including apartments, office buildings, warehouses, and shopping malls. Not only that, but REITs also pay pretty much all of the after-tax profits to investors in the form of dividends. These investment trusts take out the hassle of owning real estate. The management looks after all of the matters like rental logistics, and you just have to collect dividends. And these dividends are mostly higher than most stock-based investments. Now, how and where can you invest in REITs? Well, if you want to purchase and sell shares of a REIT stock, you should have a brokerage account. It makes REITs one of the most liquid real estate investments that are currently available with the ease of investing in stocks. Additionally, you can purchase the shares of ETFs, or exchange-traded funds, which contain shares of most REITs. With dividend-paying stocks in this type of investing, you can also get core holdings that are long-term and cash-producing leases. Moreover, if you are a new investor and do not have much to invest in, you can invest in fractional shares of REITs ETFs by investing with apps such as Robinhood, Stash, and M1 Finance. But keep in mind that you will not get the leverage that comes with traditional rental real estate. Number 3 is house flipping. It is a very common way to invest in real estate, but it is for the investors or individuals who are experienced enough in this sector so they can do the renovation, marketing, and valuation. House flipping is similar to rental properties because it takes a lot of work too. And in house flipping, you will also require capital as well as you should be able to supervise and manage the repairs that are required. That's why house flipping is also renowned as the wild side of investing in real estate. To understand the difference between house flipping from other real estate investments, you can take the example of day trading, which is not similar to buy and hold investors. In the same way, real estate flippers are different from buy and rent landlords. Well, real estate flippers mostly go for selling the undervalued properties they purchase in less than 6 months to make a profit. But if your house flipping strategy includes renovation and other things, it implies that you are taking some extra risk and putting in more money. That's the reason that you should have to be experienced in all the managerial things because they are not as easy as they look. Although flipping properties can provide you with quick returns, it requires a thorough knowledge of the market. Also, getting permits for renovations or maintenance costs can get higher than your expectations, mainly if you outsource or hire contractors for these tasks. A quick reminder, if you've enjoyed the video so far, consider subscribing, as we frequently upload such informative and educational videos. Let's continue. To reduce the cost and amount of effort in house flipping, go for houses or apartments that do not require many renovations in the future. Well, if you rent the property while waiting for the property values to increase, this approach can be more beneficial. Keep in mind that a successful flipper is always prepared for unexpected issues, a rise in budget, and other selling problems in the market. Number 2 is real estate investment groups, or REIGs. Well, this type of investing is perfect for individuals who are looking to own rental real estate and want to avoid the hassle of managing or running it. But for REIGs, or real estate investment groups, you will need access to financing and a capital cushion. And these are similar to mutual funds that people invest in rental properties. Real estate investment groups can be structured in several ways. Generally, in the case of REIGs, the company purchases or builds a couple of apartment blocks or condos. After that, the company allows people to buy them through the company by joining the group. Also, one investor can own a single or many units of self-contained living space. However, the company is responsible for controlling the investment group as a whole and also managing all of the units, like its maintenance, advertising for vacancies, and finding the right tenants. And for conducting these tasks related to management, you will have to pay a certain amount of your monthly rent in exchange. Moreover, the greatest benefit for these investment groups is the pooled capital that is acquired from a multi-partnership structure. Number 1 is rental properties. It is the most common way for investing in real estate. And if you want to make a major commitment to investing in this sector, consider buying rental properties. Having a rental property is a significant opportunity for people who possess the DIY or do-it-yourself renovation skills with enough patience to manage tenants. But this approach will need a considerable amount of capital to finance upfront maintenance costs and cover the vacant period as well. This strategy can provide you with appreciating properties and a regular income, and it can easily increase capital with leverage. Additionally, you can avoid several expenses that are associated with tax deductions. However, dealing with and managing tenants can be tedious and intimidating for some individuals in rental properties. That's why this is one of the most labor-intensive strategies in real estate investing. Mainly, there are 2 ways to make money with rental properties. These are short-term and long-term rentals. Well, in the case of short-term rentals, the properties are rotated among different tenants who stay according to their requirements, such as for a night or a day, just like Airbnb. And you can also invest in a different property that is dedicated for rental for a short period, or you can also list your house or apartment completely when you are away. As discussed, this investment requires substantial effort from your side as you have to look for and vet tenants and finance the ongoing maintenance and other problems. But with great effort and the right steps in this real estate, investing can provide significant potential in terms of profit. Just like every other investment, the best real investment for you is the investment that meets your requirements and serves you according to your expectations as an investor. Before making a decision, make sure you consider how much time or how much capital you can invest. Whether you go for house flipping or want to invest through REITs, it is highly recommended that you should have some decent DIY skills.